Hello guys, welcome back to the channel. Today I want to talk about how to kind of look at stocks, and specifically today we're going to do a little deep dive into Meta platforms, see if that's a good stock to buy. I got it pulled up here on Google Finance. You guys can follow along if you'd like. If you do like this content, please do like, comment, subscribe, and let's get started. So guys, I do have Meta platforms pulled up here. You can see it's 142.82. If you look up here, you can see the S&P was actually down 0.84%. The NASDAQ was down 1.37. If you look here, I like to keep an eye on the year range. The low of the year is 140.87, and the high for the year is 360.04. That doesn't mean that it's a buy immediately. We're going to look into this a little bit more. Another interesting thing to look at here is the PE ratio. It's 11.84. Historical PE ratios are 15, and typically if you're under, the lower your PE is, potentially you're an undervalued stock, and the higher you are, you either are overvalued or potentially a growth stock. So if you think that just because a company's PE is like 50, just from what I just said, you might think it's overvalued. However, it might have a very high growth potential, so that might be a reason to pay for a higher PE ratio. So first thing I like to do is I just scroll down on Google Finance, and you got the income statement available here, just like a very quick thing here. So revenue, you can see that the year-over-year change is down 0.88%. You can see the net income is down 35.66%. And let's see, we got the balance sheet here. Cash and short-term investments, they have $40.49 billion. Looks like a loss, or I don't want to say a loss, but a change of negative 36.81. They did. The reason I say that, they didn't lose $40 billion. They have $40 billion, but they probably had more last year. They are putting a lot of money into the metaverse, as well as we'll get into some other stuff here in a minute. And you can see here the cash flow. They are net change in cash is going down 35.66%, as we were just talking about. That's very, very similar to this here, and free cash flow is also down. Now you might ask why that's going on. Well, let's look into their investor relations page here. So I literally Googled Meta investor relations, and we pop up here. So you have the Q2, which will have the quarters are 10Qs, and then you have the annuals, which is the 10Ks. So we're going to dig into the most recent stuff, which is the 2Q. So if you click on this earnings release, we come up to this page, which I've already kind of highlighted a couple things here. So you can see it came out July 27th, 2022, and you can see the ticker symbol is Meta. Typically this first line here of the 10Qs or the 10Ks, they'll have something from either the CEO or the CFO, or somewhere up near the top of this, they'll have somebody talking about where the company is going, or they see themselves going. So Mark Zuckerberg says, "It was good to see positive trajectory on our engagement trends this quarter coming from products like Reels and our investments in AI. We're putting increased energy and focus around our key company priorities that unlock both near and long-term opportunities for Meta and the people and businesses that use our services." So after I kind of look at that, I'll look at total revenue, like we're talking about. So this is the last 3 months. So it'd be April, May, and June of 2021 versus April, May, and June of 2022. As you can see here, 3 months ended June 30th of these 2 years. So you're comparing the same year over year of the same 3 months. So total revenue is down 1%. And the other thing I really like to look at here is the net income is down 36%. However, stuff that I do like about Meta is the daily active people, the monthly active people, the daily active users are all up. So 4%, 4%, and 3%. The ad impressions have, increased by 15% year over year. However, the average price per ad has decreased 14% year over year. And that has to do with the economy and advertisers not putting as much money out there. Something else I do like here, it says we repurchased 5.08 billion in our Class A common stock, and they have, as we saw earlier, they have $40.49 billion in cash and cash equivalents. If you scroll down a little further, you got the CFO Outlook commentary. It says we expect our third quarter 2022 total revenue to be in the range of 26 to 28.5 billion, and this outlook reflects a continuation of the weak advertising demand environment we experienced through the second quarter. You guys have to know that Meta has a lot to do with advertisements, and don't forget Meta so they own Facebook, WhatsApp, and Instagram. And here it says, we expect 2022 total expenses to be in the range of 85 to 88 billion. We have reduced our hiring and overall expense growth plan this year to account for the challenging operating environment while continuing to direct resources towards our company priorities. So on that same investor relations page, if you click on earnings slides, you'll end up on something like this. And if you're more of a visual person, these are really nice to look at. Most of the companies have something like this on there as well. Advertising revenue by user. I'm not going to go over all these, but if you guys, I would highly recommend looking at these if you're going to invest in a company and just kind of see if you understand what they're doing, what rate they're going for, and it gives you a little bit more information on the company. So a couple other things I like to look at. This is actually on Yahoo Finance. If you go to the very bottom on the page for the stock, it'll tell you the growth estimates. And this is with 38 analysts to 51 analysts. So just tons of analysts there. But they only are talking about Meta for this one. So current quarter, they think they're going to lose 40%. Next quarter, they think they're going to, or when I say lose, not make as much as. Next quarter, not make as much as they did last year. And then current year be down 28.30 for their revenue. And then for next year, though, analysts do think they'll come back up 12.3%. In the next 5 years, an average of 4.9%. And then the past 5 years actually came up 17.28%. The next 5 years, you might not think 4.9% is that high. However, the company is so big that I think that 5% over the next 5 years is actually that's a pretty magnificent growth rate in my opinion. And the last thing I like to look at here is if you go to stockanalyst.com, so you got Meta Platforms here. It says their current price is 142.82, and stock price forecast. So it says, according to 65 stock analysts, the average 12-month stock price forecast for Meta stock is 230.75, which predicts an increase of 60.08. The lowest target rate is 141.40, which is like $1 away from that. And the highest is 489.30. On average, the Meta is seen as a buy. So if the average is 230 and you're at 142, I would imagine the stock will at least go up. I don't know if it'll quite go up to 230. Like I said, I'm not a financial advisor. You guys have to do your own homework on these things. But it's just something good to look at. I would look at all these metrics before you guys even decide. There's even more stuff you could look at, but I would definitely look at the 10Q and the 10K and see if you know where the company's going before you just start buying. I hope you guys liked today's video. If you do, please like, comment, subscribe. Let me know if you guys are buying Meta or any other type of stocks. And let me know if you'd like me to do a deep dive on any other type of stock. Thanks guys. Have a great day.